This is the story of a man who worked at Apple for 10 years and spent 7 of them selling Apple its own parts. Not counterfeits, not knockoffs. Apple's own components, the ones already sitting in Apple's own inventory. By the time it stopped, Apple was out more than $17 million. And here's the strange part. Almost none of it looked like stealing. So how do you take $17 million from Apple using nothing but Apple's own paperwork? His name is Dhirendra Prasad. Apple hired him in December 2008. For most of the next 10 years, he was a buyer in a division called Global Service Supply Chain, which is a long way of saying, when Apple needed parts, he was the man who bought them. That job has a shape. An order comes in. He asks vendors for quotes. He reviews them. He negotiates. He picks the vendor. He places the purchase order in Apple's system. And when the invoice arrives, the amount Apple pays is the amount he enters. Every one of those steps is a normal step. That is not a detail. That is the entire story. Prosecutors said something else about him too. That he knew how Apple looked for fraud, and that he used what he knew when he designed the schemes. Not to avoid breaking rules, to build something shaped, so that the ordinary way of catching it would slide right past. Because he wasn't planning to break the system, he was planning to use it. Here's the first version, 2013. Prasad arranges for motherboards to be shipped out of Apple's inventory to a vendor called C-Trends, a company run by a man named Don Baker. So far, nothing strange. Parts go out to vendors constantly. That's what a supply chain is. At C-Trends, Baker arranges for the components to be harvested off those boards, stripped, pulled off motherboards Apple already owned. Then Prasad, back inside Apple, issues purchase orders for components. Those components, Baker ships them back. C-Trends sends Apple an invoice, and Apple pays it. Apple just bought its own parts. Then Prasad and Baker split the money. Look at the shape of that, because we're going to see it again. The parts leave. The parts come back. And every time that circle closes, Apple pays for something it already owned. The components didn't need to be smuggled anywhere. They just had to walk out the back and come back through the front with an invoice attached. Around 2016, the loop got simpler. New vendor, a business called Quality Electronics Distributors, run by Robert Gary Hansen. This time the parts come out of an Apple warehouse in Nevada. Hansen intercepts them. He takes the components out of their packaging. He puts them into new packaging. And he ships them back to Apple's warehouse. That's it. That is the entire physical operation. Nothing is harvested. Nothing is stripped. Somebody changed the box. Prasad generates the purchase orders. Hansen invoices Apple. Apple pays. They split it. Same loop. Fewer steps. New box. Which leaves one problem. If a vendor is sending you kickbacks, that money has to look like something on paper. So Prasad caused a shell company to issue sham invoices to C-Trends. On paper, it is a company billing another company. Underneath, it is Baker paying Prasad. And it did double duty. Those invoices let Baker claim tax deductions he wasn't entitled to. Hundreds of thousands of dollars of them. With Hansen, it was more direct. Prasad had the payments sent straight to his creditors. The money never landed in his hands at all. It just quietly paid down what he owed. And all of this, every loop, both vendors, 7 years of it, ran while he was still an Apple employee. still on the payroll, still collecting a salary and bonuses worth hundreds of thousands of dollars. In March of 2022, federal prosecutors charged him. 5 crimes. Not by indictment, though. By a charging document called an information, and for a felony that is something a defendant has to agree to. In November that year, he pleaded guilty. 2 counts: conspiracy to commit mail and wire fraud, and conspiracy to defraud the United States. The remaining 3 were dismissed at sentencing. On April 26, 2023, he was sentenced. Judge Beth Freeman gave him 3 years in federal prison, followed by 3 years of supervised release. Then the money. Restitution ordered: $17,398,104 to Apple, $1,872,579 to the IRS, $19,270,683 ordered in total. Then separately, forfeiture. The government had already been taking it back. More than $5.4 million in assets already seized, plus a separate money judgment of $8,133,005. He had drawn an Apple salary for 10 years. It ended the way it had to. Hansen, the second vendor, was handled in his own case. He pleaded guilty to tax evasion and was sentenced to 3 years of probation. As for Baker, his own case was filed separately, and what finally happened in it isn't something we could confirm in the public record. So we're not going to tell you. And here's the other thing the record doesn't tell us. It doesn't say what broke this. There's no whistleblower in these documents, no dramatic audit scene. Somewhere in 7 years of paperwork, something finally did not add up. IRS. Criminal investigation led the case, but the moment it cracked open simply isn't in the public file. Which brings us back to where we started. For 7 years, every step was a normal step. A purchase order is a normal document. An invoice is a normal document. A shipment leaving a warehouse is the most ordinary thing in the world. None of it looks like a crime. It only becomes one when you can see every step at the same time, and almost nobody is ever standing in a place where they can. So maybe one day, you're the person who notices something. An invoice that doesn't match what actually arrived. A vendor nobody can quite explain. One account that only one person is ever allowed to touch. If that happens, there are 3 doors. Your company's confidential compliance line, the FBI, at tips.fbi.gov. And if there's unreported income tangled up in it, the IRS takes Form 3949A. You don't have to prove the whole loop. You only have to report the one step you can see.